Hey guys, so in today's video we're going to be doing a live trading session, and as we can see we've just been tapped into this Nasdaq short trading 2 contracts utilizing the ICT silver bullet trading strategy. So in today's video I'm going to break down this strategy for you so you guys can understand exactly how to enter and exit these trades yourself, and also we're going to be monitoring this live trade I'm in real time so that you guys can get a feel for exactly how I manage these trades, how I manage the emotions, and more importantly you guys can get a real-time look of me managing a position so that when you're trading yourself, you know whether you're on the right track or not. But as we can see, we've just been tapped in with 2 contracts. Now on TopStep, if you guys are a bit unsure on how to work out your contract sizing, then I have made a previous video in which I talk about how to figure out your risk, what each contract means, what each point means on all of the different positions and instruments that TopStep has to offer. So go ahead and give that a watch after this one. That is only if you're struggling with the contract sizing. But we're in with 2 contracts. We're risking $1,000 to make $1,000 on this 1-to-1 risk to reward trade. So what we'll do is we will actually go ahead on to TradingView so I can give you guys a better understanding of how to trade this strategy. So first and foremost, we have to understand when and when not to trade this strategy. So there's 2 sessions, the AM session and the PM session. We're going to be focusing on the AM session for today because that's what we're trading at the moment. So first things first, the AM session starts at 8 AM in the morning. And for me, I like to stop trading after 10 in the morning. So that gives us a 2-hour window. Now, these times are UK times. So if you are anywhere else in the world, then just configure it to wherever you are inside of this beautiful world. So second, what we're looking for is a simple continuation trade. So what we want to do is we want to monitor price action before it starts going into our trading period. So before 8 AM, we want to just monitor what price is doing. And let's say price is creating a series of higher highs and higher lows. So now once our trading session starts, what we want to do is identify all of the key points that we've got inside of this trading range. So we can see that right here, we've got this higher high, and then right here, we've got this higher low. So what we want to do is we want to wait for price to break either side of this range. So we want to see either a higher high be formed or a lower low be formed. And once we have either of those, then we can continue with the next part of the strategy, which is to then wait for a pullback into a key area of interest, such as a fair value gap. And then we're going to continue with the trade. So if we do in fact get a break, a market structure shift, we're then just going to be looking for trades in the opposite direction. Well, let's keep it simple for today's lesson. And let's just say price decides to continue being bullish and it puts in a brand new higher high. Now, once it does that, price is then going to have left a nice inefficiency for us. And essentially, we're just going to be taking our entry at that inefficiency just like this. And then from there, we're going to be taking our entry at the open, stops below the low. And all we're going to do is target a 1-to-1. So that is the core basics of this strategy. Now, if you do want to learn it more in depth, then I do go into detail inside of the VIP course. But for now, this is all you need to really get started with taking these trades yourself. So then all we're going to do is wait for price to come back, tap us in, and continue on from there. Now, this strategy works really well on NQ, the S&P 500, and also YM as well, which is US 30. But backtest it, figure out which pair works best for you, and then take it from there. So that in a nutshell is as simple as this strategy gets. So all we're looking to do is identify the key structural points before 8 o'clock, and then after 8 o'clock has kicked in, we're then going to monitor our structural points, wait for one of them to break, identify key areas of interest such as a fair value gap, take our entry on there, target a 1-to-1, and it is as simple as that. Right, so let me give you a few examples of trades that I've taken previously whilst this trade that we're currently in continues to play forward. So yesterday's trade, this is another trade that I took, and I have documented this on my TikTok and my Instagram as well. But again, it's nice and simple. We're just identifying what structure is doing before 8 o'clock. And as we can see, we put in a higher high and a higher low right here. So then what we do is we identify that with a nice line like this and a line right here. Then we're going to wait for either side of those to break. So now 8 o'clock kicks in right here. From there, we get all of this impulse to the upside, which means price is continuing in this bullish manner. And as we can see, price left this nice fair value gap right there. So after it left that fair value gap, all we simply did is take our entry at the open of that fair value gap. And as we can see, we got tapped in with a literal zero drawdown on this trade. We put our stops just below the most prominent low, because if it invalidates that, then it invalidates the entire trend. And we simply target a 1-to-1. On here, I did let it run to a 1-to-2. And again, if you get comfortable with the strategy, if you learn a little bit more, like I said, I teach inside of the VIP group, then you'll become comfortable in holding these trades for extended periods of time, and you'll start making a little bit more profit. But we had this super clean tap straight in, price ran straight to take profit. So it was super easy, super simple. And again, you can trade this on the AM session, and you can also trade it in the PM session. As I said, this is the AM session that we're trading today. And as we can see, price gave us a beautiful setup, and that's exactly what we've got going on today. Instead, it's just a short instead of a long. So that pretty much sums up this entire trading strategy. So let's go back and take a look at what price is doing at the moment. So as we can see, price is pushing a little bit deeper, but we do have this secondary fair value gap just below our entry. So price can potentially push a little bit higher into that fair value gap. But that's why we put our stops just above that high right there, because if we go to that fair value gap, we don't want to get stopped out. We want to put it above the high, because if it invalidates that, then it invalidates the entire trend. We're shorting. If it breaks that high, then price will become bullish, which means we were completely wrong about the trend in the first place. So that is all that really matters. And now we're just waiting to see what price does. So drawdown is acceptable. Drawdown happens to all of us whenever we're in a trade. It's something that we can't get away from. It's something that we just have to accept. Now, we can't let drawdown be the ruler of our emotions, right? Because in a position like this, when price is going into drawdown, a lot of people will panic. A lot of people will potentially move their stop losses higher, assume a little bit more risk, or they may close out the trade early because they may think, oh, it's in drawdown, I don't want to lose too much, let me just close the position. And that is something that you really do not want to do. And the reason for that is because you've already assumed the risk. I've already assumed $1,000 risk. So in my head, I've already lost that $1,000. Now, I can close early, but then what was the point in me entering the trade in the first place, right? It just doesn't make sense. So that's why once you assume risk, you then let the risk play out. It's either going to hit your stop loss or it's going to hit your take profit. Don't be that person who's, manually running into their trades and trying to hold it for longer, or, close it earlier or extending the stop loss. Just don't do that. Let the trade play out. If you've back tested it, you've collected that data, you know the trade works. So if it works, don't tamper with it. Let your edge play out. Let the statistics play out. Now with this strategy, I have about an 84% win rate, which means out of 10 trades, I'm going to lose 2. So I know 2 losses are coming, but I don't know when they're going to come. So I can't be focused on the losses. I'm more focused on the winners, because I know when I win big. But having said all of that, we do have 45 seconds left till the close of this candle. If we can get a nice rejection on this candle and we close below, then I have more confidence that we are going to drop lower. But like I said, we do have that fair value gap just above that price can potentially target. And if it does, again, we are happy with that. We are okay with that. We know that it's there. We know price can potentially target it. We're not going to shy away from that. But hopefully that doesn't happen. Hopefully we just run straight to our take profit. Let's drop down to the 1 minute and take a look at what's going on. So as we can see, price is creating a series of higher highs and higher lows right here. So we need price to break below this higher low right here. And if it does that, then we can safely assume that price is going to go lower. So we really do need to break and close below that. But as we can see, we do have that fair value gap just above where price currently is, so we can potentially tap into that 1 minute fair value gap and then drop from there. That is what I'm assuming is going to happen. Just take a look at my other account. So that account is moving nicely too. Okay, so we get that push up, and as we can see, we have just tapped into, well, we are just about to tap, we've just tapped into that fair value gap, and now price is dropping. So like I said, price does everything for a reason. Price is not randomized. It does everything for a reason. We tapped into that fair value gap and now we're dropping. So that is really nice. That is what we want to see. Let's now go break even because Just make sure, there we go. Candles closed, let's go break even, because now we've invalidated the bullish trend on the 1 minute. The 5 minute looks extremely good, 2 wick rejections, and now price is dropping with a full body. So that's nice to see. And like I said, on the 1 minute, we closed below that low, invalidating the bullish trend, and we're now going to drop lower. So that is really nice to see. So by the looks of it, we should have a smooth run to our TP from here. So on the 1 minute, we do have this 1 minute low that we really need to break below, the same as we did just a little bit up above right here. So we do need to break below this second low. If we do, then the trend is going to continue and we're going to have no problems going to our TP. We've now gone break even and secured $90. So that way we are completely risk free on this trade. So now we're either going to get break even or we're going to hit our take profit. So let's see what happens. 5 minute looks really good. That 5 minute candle closure had a lot of volume. So that does give me a lot of confidence that we are just going to drop straight from here. Okay, and there it is. So we've hit take profit with some nice volume. So I hope you guys enjoyed watching me do that live trading session and also breaking down the strategy for you in a little bit more detail. If you did enjoy this video, then don't forget to leave a like, comment, and subscribe. If you do like these types of videos, then let me know down in the comment section. And on that note, I'll catch you guys in the next video.